Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, I do have my good friend. He is a great pal and is not Blue Man Group today, is Mr. Green. Are you the Incredible Hulk today?
You are talking about my sweater that I have on, and that concludes the fashion portion of the show. So let's get into investing and trading.
You could be the Incredible Hulk with that green today.
Are you scared?
I do look scared, don't I?
Looks like you have fear in your eyes there, Josh.
It's always great to be back, helping our family make better investing decisions. And as always, we have another phenomenal show today. We had a lot of great moves in the market these past few weeks. Really, this whole year has been a great ride, and we've seen good moves up and down in these financial markets. And that's a lot of the things that we're going to talk about here today on Investing with Confidence, is how the average investor can potentially trade and invest like the Wall Street, like the banks, the institutions. Sure. We call it the smart money. It's having a strategy that's designed to do that. Before we do that, Al, what's going on with these markets? Why are we seeing such great volatility? Is it the positivity that's happening in this world?
Well, there's a lot of things that are going on, some positive, some negative. We're seeing market conditions change pretty much sometimes the same day. But, we still have issues with the coronavirus. There's still that hope that the economy is going to come out on the other side in great shape. But now we also have a little bit of concern about inflation, high interest rates that might impact kind of a switch from stocks into fixed income. So a lot of things out there to consider. But with these different market conditions, sometimes that requires a different way of reacting to those conditions. And if you want to have the potential to succeed, you have to really be prepared to take advantage of what the market is presenting.
And really, it's also being proactive and not reactive as well.
Well, that's true. And unfortunately, for a lot of people, they are more reactive and not proactive. So if you look at, we talk about the smart money, those guys are proactive. They are taking advantage of and are prepared to take advantage of the opportunities that the market presents. And that's really what results in success is the preparation to take advantage of the opportunities. Unfortunately, I think what's happening now with a lot of these big moves, what's happening is the market is almost pressuring people to forego sound, reliable trading strategies, and they're letting their emotions get too involved with their decisions. And that always is a recipe for something not good happening.
You're right.
I think what this is a good time to talk about why people are listening to the show, why you might be considering the financial markets. Maybe it's because you need or you want extra cash now, or maybe you're thinking about retiring. Are you going to retire? Will you be able to retire? And, what are you going to rely on when you retire? Unfortunately, there are still a lot of people that just don't participate in the markets, and they're really not taking advantage of what that potential is and could be. And the people that do oftentimes are struggling and probably more often than not fail to achieve the objectives they're looking for.
Yeah, Al, a lot of people just jump into the market and don't really know how to do that. That's some of those reasons.
Yeah.
And that's why our sponsor, Online Trading Academy, teaches people, the strategies that are designed to trade and invest for them.
Right. Well, and the primary reason that people don't participate or don't participate successfully is that lack of education. And the sad truth is that there's a lot of people out there that have graduated from high school and college that don't even know why the stock market exists.
Yeah,
and if they do, they don't know how it functions, and they certainly don't know how to take advantage of how it functions. And what happens then is that they look at the markets as being a casino. They look at this as gambling. And, how often do we have people come in here and say, my spouse really doesn't want me to do this because they think it's gambling.
It happens all the time. It's just that it's misinformation.
It is misinformation. And this is what we always say, if you don't have a way of identifying with a high degree of accuracy when price is going to go up, or a high degree of accuracy when price of something is going to go down, then you are gambling. Then you're hoping that, and you're just praying that things work out. And if that's the case, then you might as well just go to a casino. You're going to lose your money anyways. You might as well have some fun while you're doing it. But how do you identify when the price is going to go up and go down with that high degree of accuracy? It starts with knowing what causes price to change direction, what causes price to make big moves in one direction or another. But to really take advantage of that, you have to know where that's going to happen before it happens. And we know what that's called.
That's called market timing.
That's called market timing. And most of you have heard at least once, if not many, many times, you can't time the market. Well, that's what Wall Street wants you to believe, because if you know how to time the changes in prices of assets or the markets in general, you really don't need their help.
Think about that. That's a pretty good strategy that they have. They tell people they can't do this, they can't do that, you can't do this. Why? Because they need what? Assets under management.
Sure.
So they're conditioning the average public to think they can't do something.
Sure. And the public, for the most part, believes that and then pays these people to do what they're told they can't do. And this really is what market timing is, Josh. It's really finding a price where that price has the lowest risk potential and the highest odds of working in your favor with a high profit potential. It's resulting in high reward, low risk trades. And those always or almost always happen at or near the turn in price. But that turn in price has to result in a move strong enough to make it worth your time. That happens when institutions buy or sell. When they're entering or exiting the market, they're doing it with such high volume, and they have to do it in a way that we're able to take advantage of. And we know how to do that. We have a strategy, our core strategy, which was developed by people that worked on Wall Street, really that were in control of those orders. They know how those unfilled orders that we're looking for, how they impact the market. And that's what the core strategy is based on.
Yeah, and I think a lot of people don't really understand that price is that number one thing you need to know and enter your positions. It's not, time in the market, it's the actual price. And it all comes down to is that good old thing is called supply and demand. How you identify that is on a chart, an actual price chart. That does not lie. I mean, a lot of people do a lot of their research online, and what happens is they want to be informed. Well, what really happens is they're sometimes being misinformed by what they actually read. So you have to be doing your analysis based off the facts, which is an actual price chart. Al, we got a packed show coming up in the next few segments here. I want to talk about that smart money, continue that discussion about how they're creating income, because there's a lot of listeners that want to understand how do they do that. Well, these techniques and strategies are also available to us, the public. We'll be right back.